To the other big event, which is far more material for the stock market at large over the next few months, are elections, as also the fact that the G20 meeting early next month could throw up some interesting possibilities for emerging markets. Alistair Newton of Nomura International is with us now. Alistair, morning. Thanks very much for joining in. First, what's your sense of what may come out, which could be construed as positive news for equity markets from the G20 meeting?
I'm not optimistic that we're going to get a huge amount out of the G20 meeting on the 2nd of April. Finance ministers meeting yesterday, somewhat upbeat communique, but not a lot of substance in it, to be honest. A long way to go on this. Clear differences between the US and Europe. US pushing for more fiscal stimulus, Europe looking for market reform. Still not clear exactly where the emerging markets stand in that. I would certainly expect to see more fiscal stimulus from China, possibly from Japan. Euro area will be very cautious on that. The US, the big question is the financial stability bill rather than further fiscal stimuli at this stage.
Alistair, morning. Your report has suggested, though, that you see this year as extremely important by way of international politics and its impact on markets. In that sense, do you expect some kind of solution to be cobbled out to of the financial crisis or even the banking crisis?
I'm not sure that there is a policy solution per se. If I think back to the last big crisis in 1998, when I was working for then Prime Minister Blair, policymakers were able to come up with a declaration out of G7 which changed market sentiment. My sense this time, looking at where the real economy is we're probably going to have to do this the hard way and wait for the economy to turn before we see a turn of sentiment. The good news from that perspective is that despite the dip which emerging markets have inevitably taken in a world where decoupling has proved to be something of a myth, emerging markets do stand to do better than the OECD countries, and we would expect to see some uptick in emerging markets, in particular in the second half of this year, including in India, where we'd expect growth to bottom out next quarter, bit above 5.1 this year, heading up towards 7 next year. Not great figures by the standards of the last 4 years, but still pretty good.
How important would be the results of these elections, Alistair, in your eye? From a global investor's point of view, how closely would the election outcome be watched this time around?
I think the election in India is very important indeed. I've been travelling around the world for the last 2 months. A lot of fund manager interest in the Indian election, a lot of uncertainty surrounding its outcome. This is probably the most difficult Indian election to call the outcome of which I have ever seen. I guess the two big factors which are weighing on markets' minds at the moment are, first of all, the India-Pakistan relationship, the terrorist threat, which we all know unfortunately is out there. Let's hope we don't see a repetition of the sort of terrible attacks which Mumbai suffered at the back part of last year. And secondly, the possible emergence of a third front in Indian politics, the Mayawati factor. BJP, Congress, both very known quantities to markets. If I look back over the last 6 or 7 elections, the outcome hasn't really figured strongly on market sentiment, depending whether it was INC or BJP who emerged as the ultimate winner. But a government which was beholden to a strong factor from the third front would be an unknown to markets, and I think markets are slightly worried about what a Mayawati communist coalition in particular could mean for the economy going forward. What markets really want to see is a pro-reform government which is going to push forward on structural reform after the elections, and I guess top of my list of priorities would be pension reform with a view to developing a corporate bond market in India, which seems to me to be a prerequisite for hard infrastructure development of the sort of ambitious nature which this Indian government and indeed the BJP clearly has in mind.
The third front by themselves or by itself may not have the numbers to form a government, but the likelihood, there's another possibility that either the Congress or the BJP actually gets supported by some members or constituents of the third front, like the left parties or Mayawati. But would that be acceptable to the global fraternity, or would that make them equally nervous?
I think we'd want to look at the detail of how it's going to work out, to be honest. You're absolutely right. A third front as a coalition former rather than a kingmaker looks to me to be pretty unlikely at the moment, although who knows come the next general election after this one. But for the time being, it all depends on the post-election bargaining between the various parties. We're certainly going to see a multi-party coalition. At the moment, Congress looks to be slightly better placed than BJP in terms of coalition negotiations, but a lot could happen after the election depending which of those two emerges as the largest single party. Markets are going to look very carefully indeed at any talks which are going on between either of the two main parties and Mayawati and the Communists, and if it looks like they are going to be in a swing position, then I think markets are going to be nervous. If we see a clear break where either Congress or BJP is going to be able to pursue a pro-reform agenda, that's going to be very positive for market sentiment. At this stage, frankly, too early to tell which way it's going to work out.
At this point in time, though, Alistair, are you getting the sense that fund managers are holding on to their investment calls in India, waiting for the election outcome? And just as a corollary to that, if the Third Front does emerge as a meaningful force in the government that comes to power, do you fear there might be large-scale outflows?
I don't think we're going to see large-scale outflows. I mean, India has a very positive story to tell for the last few years, obviously been hit by the global financial crisis. There was an inevitability about that, sadly. But overall, we still see terrific upside potential in India. We have a very bullish call from about 15 months ago when we published a major study on India. We believe that India can head back towards 10% per annum growth, hit 10% per annum, if we see a further round of structural reforms after the next election. Overall, fund managers want to see India do well. They believe India can do well. As I say, those two factors which are just making people stand back a little, be slightly cautious at the moment, election outcome and the India-Pakistan relationship.
Good talking to you, Alistair. Thanks very much
for
stopping by today. That's Alistair Newton, the Managing Director, Equity Research and Senior Political Analyst at Nomura International, talking about the possibilities. Yes, they don't want the Third Front there. Nobody in the market does, I would imagine. That's the point which is making it nervous, but still a bit of a stretch, that possibility.